general, are we seeing a turn in sentiment, shall we say, about global economies and global markets? And is this sort of the fall bringing leaves and markets falling?
There's certainly disappointment that it doesn't look like the economy and corporate earnings are going to pick up as we go into the end of the year. But that's really been perennial. If you look back in this whole expansion that started in the middle of 2009, there's been this constant drumbeat that the economy is going to revive rapid growth. And, of course, then that meant that the Fed was going to raise interest rates and everything is going to be on the upside. But the reality is, in my view, we're still working off a lot of the excess debt, the excesses of the 80s and 90s. It's the age of deleveraging. And this process is still underway. And what's interesting about this has really spawned this winter of discontent, this whole movement toward populism. We see that in Europe. Marine Le Pen leading the National Front in France. We saw it with Bernie Sanders here and with Trump, of course. People are mad as hell because most people in Western Europe and North America have had no growth in their purchasing power for over a decade, and they've rejected mainstream politicians and turned to the fringes. Now, I think ultimately this is going to result in a huge push for fiscal stimulus because monetary policy is impotent. But it is a continuation of a situation which, for many people, is just unacceptable.
So you would tie what's going on here in the markets to the presidential race.
Well, I think it is, and one of the possibilities here that you say, why have stocks held up? Why are PEs as high as they are, and so on? It may be that investors are beginning to anticipate big fiscal stimulus down the road. We won't know that until the new president and Congress are installed in January and they get their act together. But I think whoever wins, there probably is going to be a big movement. The two areas that we've earmarked on this are, one, infrastructure spending, which both Democrats and Republicans can agree on, and the other one is military, which would be much more favored if the Republicans controlled Washington.
Gary Shilling with us. Once a year, you know how, like on radio, folks, once a year, like you sip a cup of coffee and it goes down wrong?
Oh, are you dying?
I just had that. That's it for 2016.
Well, in case something happens to you, we've already lined up Gary's recommendation,
That's
Howard
true.
Beale.
That's good.
To replace you.
Well, that's okay because they got the surveillance casket right out back behind.
We have Howard Beale standing by from the Movie Network to fill in for Tom while he recovers from swallowing some coffee the wrong way. I mean, it's bad enough you swallow coffee, Gary, but you swallow hot stuff the wrong way. It hurts. Gary Shilling is with us, playing the role of Howard Beale right now. You're never mad. You're never mad as hell. You're always cheerful.
Well,
cheerfully presenting.
Yeah, well, the mafia, they say don't get mad, just get even.
We were talking earlier on Bloomberg Surveillance on Television, the same thing we were talking with Alberto Gallo on, about the changes in the way markets operate these days and the fact that computers drive so much and liquidity is down in a lot of areas. How much does that concern you, and how much does that affect the real price of assets?
Well, it does affect the price of assets, and there is a spillover of asset prices to the real economy, the goods and services economy. A real wealth effect, for example, the idea if people have higher assets, then they are going to spend more money on goods and services. But those effects are much weaker than they used to be. I think a lot of that is because of the polarization of income. And assets have moved into the upper reaches, and if somebody there has 4 cars in his driveway, his portfolio goes up, he's probably not going to buy a fifth. It doesn't make a lot of difference. But I think you have to realize that in this whole expansion, ever since stocks took off in March of 2009, and then the economy followed at the middle of the year, you've had two worlds there. You've had a financial world out there. I called it the grand disconnect. You've had a financial world which has really been driven by central bank money more than anything else, affecting stocks but other assets. And that's been very strong on balance. And then the goods and services economy, you're still in this, what I call the age of deleveraging. And you say, are those two worlds going to come together? And I think they will eventually. But in the meanwhile, all the turmoil, the liquidity, all these other, they're important to certainly market participants. And there is a spillover effect. But I don't think it really addresses this central issue. And again, that's the Howard Beale issue. That's the people are mad as hell because they have had no increase in real purchasing power in over a decade. And for most people, hey, the strength of stocks doesn't mean much. Most people own very, very few stocks, either directly or through mutual funds.
Gary, one of the great charms of Gary Shilling is you've been exceptionally able on deflation, disinflation, lower yields, but you've always said be in the market. I have never, ever once heard you do the doom and gloom, go to cash. And here we are with markets. You've been dead on that as equities have elevated. So what do you do now? I mean, is it finally where Gary Shilling says go to cash?
Well, not entirely, Tom, but in the portfolios we manage, we are heavier in cash than we've ever been.
A percent?
50%.
50% in
Yeah.
cash.
And it really is simply the lack of movement in markets. The markets that at least I find the most difficult to invest in are sideways. If they're going in your favor, and I never invest against my fundamental convictions, what I think is there going on in terms of the economic themes and so on. If they're going in your favor, hey, that's wonderful. If they're going against you, you just say, I'm just not going to participate.
Right.
But if they're moving sideways, boy, that is treacherous because you're tempted to get in, you think things are moving, you get out. And I found the best thing to do is if you don't have distinct movements, you ought to have a big pile of cash.
The Gary Shilling math, and you can do this when you're physics out of Amherst, is price up, yields lower. I get that. And if yields continue to drive Gary Shilling lower, there's a point where you wonder how much more can there be a capital gain? Do you assume full faith and credit bonds go to a premium pricing and you still get your Gary Shilling total return?
Well, I don't think so. As you know, I've over a year ago, I said I thought we were going to 1% on the 10-year Treasury and 2% on the 30-year, and I still think that that's valid. Now, do we go into negative rates in this country? I don't think so. You know, the Fed is basically let the others run that grand experiment. They've let the Bank of Japan, the ECB, the Swedish Reichsbank, et cetera, Central Bank of Switzerland. These guys have gone into negative rates, and negative rates really haven't worked. If anything, they've encouraged people to save more and not to spend, not to borrow. And I think the Fed has just sat back and said, we'll let them do it. And we're not, and now they've concluded it doesn't work, and I think that's true of the Bank of Japan as well. So I doubt that we're going there.
And now it's Physics Monday with Dr. Shilling. Gary, macroeconomics, which some would suggest you invented modern macroeconomics with Ed Hyman, among others. Maybe Bob Farrell would be there in there too on strategy. Dr. Shilling, the basic idea is it's a one-mode American economy. It's a Gaussian economy. It's 1 over the square root of 2 pi. It's a simple formula everybody's known since time began. Are we in a bimodal America, a two Americas in income, wages, education, technology, where the formulas that you helped invent don't work anymore?
Yeah, well, they don't work temporarily, and I think that the basic cause, Tom, is globalization, which to me is the most important global economic development in the last 30 years. And what it has done is it has speeded up what is normally technological process. Technology usually creates more jobs than it destroys. But when you transfer manufacturing largely from Europe and North America to China and other developing countries, you leave a huge, huge gap there. And I think this is principally responsible for this polarization of income and this mad as hell reaction.
And Larry Summers with a fabulous review of Nick Eberstadt's book at AEI on the men of America, the male in America, and the underemployment. Gary, can we fix that by policy, or do we just have to give up and move those jobs?
Well, there are
to
others. Charles Murray,
other countries?
I think, has done,
Right.
his Coming Apart book. I don't know if you read that, but there's some marvelous studies of this. And, of course, one of the things that we're seeing now is this use of drugs of basically unemployed white males who really just don't have any purpose in life. I think it's a transition period, and I'm not sure that there's an awful lot that can be done with policy. Yeah, retraining and so on, but how many of these people really have the incentive to get retrained, and how many of them have the capability? I mean, after all, there were a lot of people who were twisting on bolts in Detroit and in autos who were way overpaid by global standards, and the fact that those incomes disappeared,
Right.
they don't understand it.
You mentioned yields before. You reaffirm your 1% call on interest rates on full faith and credit 10-year. What's the Gary Shilling call on gold?
I'm agnostic on gold. I've never really understood gold. The only thing you can say is that if one basic force pushes gold, it was inflation in the 70s. It may have been distrust of paper currencies more recently, but I don't think there's a clear deal. The one thing you can say, though, Tom, is that you have conditions here that ought to be ideal for gold. Tremendous political uncertainty and zero carrying costs. And, of course,
Right.
gold doesn't return anything, so carrying costs are very important. And you say, if gold isn't taking off now, there must be something else going on, and maybe it's the deflation that I've been forecasting.
See how he got, John, did you see how in the last moment they're looking at the clock, Shilling got the shameless plug in there for his classic book, Deflation? See how he snuck that
I believe
in?
it's the age of deleveraging.
Well, Tom goes
No, that's
back
the
to
latest
Oh,
book.
that's
Tom
the
goes
latest.
back to one I wrote in 1998.
Well, let's
called
mention both of
Deflation.
them.
Yes,
Okay.
why not? Gary,
Tom,
thank
Tom
you so
usually
much.
shows that one on TV.
Gary Shilling with us this morning, folks. And I really can't say enough. If you want to explain to your kids this word deflation, Gary wrote a book 20 years ago. I call it the Blue Book. It's a paperback book. It's on all my lists. Light blue, dark blue, called Deflation. I can't say enough about it. Is the primer on price change. It is just absolutely superb. Gary Shilling, Gary Shilling, and again, we protect the copyright of all of our guests. I will not send out Gary Shilling and Company's propaganda that they put together